Hi there, a very good morning and good afternoon to all of you, depending on wherever you are hearing me. This is Simply Stocks, and I'm live and I'm with this video today, and this is about endurance tech. So, today I'll talk about endurance tech, which may continue to surprise everyone and move higher over the next 6 months. So, let's understand about the business. Let's get started. First, all a disclaimer that this is not a stock recommendation, and people taking any position to any share that I talk about should do that with their own due diligence and research. And I'm not in favor or against any company that I talk about. Before I talk about Endurance Tech, here's a small request that kindly support me on Patreon. And once you do that, it will help me grow the channel, help you also ask me questions and eke out answers in greater detail. Once you get the $10 membership, you'll have access to my portfolio, my watch list, and a number of podcasts that I put up from time to time. Now about the company, Endurance Tech was established in 1985 and they are into auto components manufacturing. They are a major auto ancillary play that serves in India and abroad. They most of marquee clients in the four-wheelers and the two-wheeler space, but primarily it makes brake systems, suspensions and transmission products for all vehicles. They have global presence with clients, as I said, across Europe majorly, and the market cap of the company is around 24,000 crores. If you look at the numbers, then sales were up quite a bit. In fact, the sales were up around 11-12% in the September quarter, and the profit was of around 133 crores. So, profit of 133 crores versus profit of 167 crores. So, profit dipped a bit, but debt is low and margins have shrunk. But I think going forward, things should look better as things get better on on the ground for all the auto companies. Remember that there was a lot of issues last year with the semiconductor shortage, and that is getting resolved as well. So very strong combined promoter and institutional holding with around 2% free float. This is also a very big positive, and that's why the stock remains in a range. Even in a downtrend, it doesn't fall a lot, and whenever the move begins, it's going to begin big time on the upside for the company. If you look at the performance, stock has gained 50% in the last 1 year. So over the last 18 months or so, it has gained around 70 to 80%. It has been one of the most stable auto ancillary play, as I mentioned. So whenever there is a downturn, then the stock doesn't fall more than 5-7% and stabilizes. Numbers are better on the top line, and I think bottom line will improve. I think from FY23 onwards, with the semiconductor shortage getting resolved, I think they're going to get the raw material at reasonable prices now. So the cost will curtail down, and so the profit should come in better. Uh, Results have remained fine in difficult environment. You have to understand, we've seen a couple of small cap ancillary companies coming out with very dismal results already for the December quarter. So there have been very difficult times for the auto ancillary player, and remember, it is a very difficult, very competitive market altogether. So overall, it has come out unscathed over the last 2-3 years. Now probably from FY23 onwards, one more quarter probably of results being up and down, and then the performance should kick in. So why there has been a slowdown? Auto industry has been under stress since 2018. So from middle of 2018 till probably now 2022, things have really remained very subdued for the industry, and this is a long term cyclical kind of sector, which does well for 6 years, 6-7 years, and does relatively very badly for 3 years, and probably those 3 years are behind us, and now autos and auto ancillaries should perform from this year onwards. Shutdown has also accelerated the decline, and the pandemic has really hurt the manufacturing sector, and auto ancillary has been top, you can say, on top of that manufacturing pile. Commercial vehicle segment has been most hit, and they produce a lot of products for the commercial vehicle. But as economy gets better and gets back onto feet, I think their numbers should end up increasing. There has been projection of further stress in the next 2 years, and that's why the stock plunged even more over the last 6 months. But now things are looking up, and that's why most of the ancillary stocks and most of the auto stocks are performing. So sector went out of favor. Now people are getting back into the auto sector, and the whole auto index is gaining momentum. So probably 2 3 months more, and then you'll see a sharp up move in this sector as well. So if you look at the technicals, major long-term support is around the 1550 levels. Currently, the stock is at 1650, 1660. Around 1500 is a strong support. A resistance zone is between 1850 to 2000, and a huge up move is expected above 2000. I see a 30 to 40% upside if the stock surges past 2000. May consolidate as market sentiment is volatile, so it may just still be between 1550 to 1750 for a while, but then the breakout is imminent in this over the next 6 months. Should perform very well, and should take out the all-time highs going forward. So my call is, if you have it, then hold on to the stock and add on massive declines if the stock falls towards 1400, 1500 levels. Those are very good levels to accumulate the stock. And I think cycle should turn around in a few months, 3 to 4 months. It is one of the best auto ancillary plays with the large investors invested into them. And you have to understand that it's majorly a long term play. Yes, the stock may surge for the second half of 2022, but if you can hold for the next 3 years, it will perform extremely well. I won't be surprised if it doubles over the next 3 years, but put only 5% of your total holding into such stocks. So this is my video on endurance tech. Please like and subscribe my channel and hit the bell icon so you can get my videos straight away when I post it. Kindly support me on Patreon. Thanks a lot.